Germany has long been the engine of Europe, renowned for its precision engineering, world-class cars, and industrial might. Its export-driven model has set the standard for prosperity, with companies like Volkswagen and Siemens recognized worldwide. The health of Germany's economy ripples across continents, shaping supply chains and business confidence far beyond its borders. But this deep global integration is a double-edged sword. When the world economy stumbles, Germany feels it first. This summer, the numbers told a new story, one of unexpected challenges and shifting fortunes. The July 2025 data revealed cracks in the narrative of unshakable German strength. Let's break down what's really happening behind the headlines. July 2025 brought a surprise that few saw coming. German exports, long considered a pillar of the nation's economic strength, fell by 0.6%. This seemingly small percentage drop sent ripples through the financial world, as Germany's export sector is not just a national engine, but a key player in the global economy. The decline defied forecasts of a modest rise, catching analysts and economists off guard. For months, experts had predicted steady growth, pointing to strong order books and robust demand from international partners. But the reality was starkly different. For a nation built on selling goods abroad, even a small drop is a warning sign. Germany's reputation for quality manufacturing and engineering excellence has made its exports a symbol of reliability. So, when shipments slow, it's not just numbers on a spreadsheet. It's a signal that something deeper may be amiss. The unexpected decline rattled markets and raised tough questions about global demand for German products. Investors reacted swiftly, with stock prices of major exporters dipping and financial news outlets buzzing with speculation about the causes. This wasn't just a statistical blip. It meant hundreds of millions of euros in lost sales and unshipped goods. Warehouses began to fill with unsent cargo, and shipping schedules were abruptly revised. The impact was felt not only by large corporations, but also by smaller suppliers and logistics firms across the country. Businesses grew cautious, and the mood shifted from optimism to concern. Boardrooms that had been filled with talk of expansion and new markets now echoed with uncertainty. Managers and workers alike wondered if this was a temporary setback or the start of a more troubling trend. The world had looked to Germany for stability, but the export stumble forced a reassessment. International partners began to question whether the slowdown was isolated or a sign of broader challenges facing the global economy. It was a wake-up call, reminding everyone that even the strongest economies aren't immune to global headwinds. Trade tensions, shifting consumer demand, and supply chain disruptions all played a role, highlighting the interconnectedness and fragility of today's markets. Now, experts scrambled to understand what was driving this sudden downturn. Was it a temporary dip or the beginning of a longer-term shift? As policymakers and business leaders searched for answers, one thing was clear: the world would be watching Germany's next move very closely. Here's the twist. While exports dropped, German industrial production actually rose by 1.3% in July. Factories were busier than expected, defying the export slump. This divergence puzzled analysts. Why ramp up output when foreign sales were falling? One clue. Companies may have been building inventories, betting on a rebound or guarding against supply chain shocks. A major data revision also softened the previous month's decline, hinting at more stability than first thought. The 3-month trend showed production holding steady, not collapsing. So, while exports flagged, German industry kept humming, at least for now. Was this confidence or just a temporary disconnect? The paradox revealed an economy at a crossroads, sending mixed signals to the world. The biggest shock to Germany's export-driven economy came from across the Atlantic. Exports to the United States plunged nearly 8% in a single month, a drop that sent ripples through boardrooms and factory floors alike. This wasn't just a minor dip, it was the steepest monthly decline in years, and it caught many by surprise. For German businesses, the US has long been a reliable and lucrative market, so such a sudden fall in demand was both alarming and unprecedented. The US is Germany's top trading partner, accounting for billions in annual exports. From luxury cars and industrial machinery to pharmaceuticals and chemicals, German goods have been a staple in American supply chains for decades. So when orders from the US dried up almost overnight, the impact was immediate and far-reaching. Factories slowed production, shipping schedules were disrupted, and thousands of jobs suddenly felt less secure. The culprit behind this dramatic shift? New American tariffs of 15% on a wide range of EU goods, including many of Germany's most important exports. These tariffs made German products significantly more expensive for American buyers, eroding their competitive edge and forcing many importers to reconsider their purchasing decisions. Suddenly, products that had been bestsellers were now sitting on shelves, priced out of reach for many consumers and businesses. These tariffs, fallout from escalating trade disputes and political tensions, forced U.S. buyers to look elsewhere for alternatives. American importers, faced with higher costs and uncertain supply, began sourcing products from other countries or shifting to domestic suppliers. The result was a rapid and painful adjustment for German exporters, who suddenly found themselves locked out of their largest overseas market. For German manufacturers, the loss of their largest market was a major blow. Production lines slowed, inventories piled up, and business leaders were left scrambling to find new buyers or cut costs. The uncertainty rippled through the entire supply chain, from raw material suppliers to logistics companies, amplifying the economic pain. The drop exposed just how vulnerable Germany's export model is to global politics and protectionism. For years, Germany's economic strength has relied on open markets and stable trade relationships. But as tariffs and trade barriers rise, that model faces new and unpredictable risks. Economists warn that without diversification and adaptation, Germany's export sector could face even greater challenges in the future. Companies now face tough choices: absorb the extra costs and risk shrinking profits, pass them on to customers and risk losing market share, or rethink their entire U.S. strategy. Some are considering shifting production to other countries, while others are investing in new markets or doubling down on innovation to stay competitive. The pressure to adapt has never been greater. The message was clear: trade relationships can shift overnight and the old certainties are gone. What once seemed like a stable, mutually beneficial partnership can be upended by a single policy change or political dispute. For German exporters, the lesson is sobering. Flexibility and resilience are now essential for survival in a rapidly changing global economy. Germany must now adapt to a world where tariffs and tensions can upend business as usual at any moment. The future of German trade will depend on how quickly companies can pivot, innovate, and build new relationships in an increasingly uncertain world. While exports to the U.S. tumbled, sending shockwaves through German boardrooms and raising concerns about the country's economic resilience, another story was quietly unfolding closer to home. Germany's trade with the EU actually grew by 2.5%. This growth wasn't just a statistical blip. It was a testament to the strength and interconnectedness of the European economy, where open borders and shared regulations kept goods flowing even as global uncertainty mounted. The European single market proved a vital buffer, absorbing shocks from abroad and providing German exporters with a reliable safety net. In times of global turbulence, the EU's unified market acted as a stabilizing force, allowing businesses to adapt quickly and maintain momentum. With strong demand from neighbors offsetting losses elsewhere, German factories kept humming and workers stayed busy. The close economic ties within Europe helped cushion the blow from falling demand in distant markets. But outside the EU, exports fell sharply, down 4.5%, highlighting a growing divide between regional stability and global volatility. German products that once filled shelves from Asia to the Americas now faced new barriers and shrinking demand. The EU's stability is a lifeline, offering predictability and shared prosperity. Yet, even this powerful alliance has its limits. The European market, while robust, cannot absorb all the goods and innovation Germany produces. It can't fully replace global markets, where the scale and diversity of demand have long fueled German growth. The world's appetite for German engineering, cars, and technology remains crucial. Germany's growth has always depended on winning abroad, not just at home. International success has been the engine behind its prosperity, driving innovation and creating jobs far beyond its borders. Relying solely on Europe risks stagnation. Without access to the wider world, German industry could lose its competitive edge and dynamism. The risk isn't just economic, it's about the country's place in the global order. The world's appetite for German goods still matters. From luxury cars to precision machinery, global customers drive demand, innovation, and investment back home. The July data was a warning. Regional strength helps, but it's not enough. The numbers tell a story of resilience, but also of vulnerability to global headwinds. Global challenges can't be ignored. Trade tensions, shifting alliances, and economic slowdowns abroad all threaten Germany's export-driven model. Policymakers must fight for open markets beyond Europe to secure long-term prosperity. Diplomatic efforts, new trade agreements, and global partnerships are more important than ever. The future depends on balancing strong EU ties with a vision that reaches far beyond the continent. Germany's success story is built on both regional cooperation and global ambition. Only by renewing its global reach while strengthening its European foundation can Germany and Europe continue to thrive in an uncertain world. Exports weren't the only thing slipping. German imports dipped slightly too, hinting at softer domestic demand. The trade surplus shrank to 14.7 billion euros, still large but down from previous months. This narrowing gap signals pressure on Germany's export-led model. A shrinking surplus can mean lost competitiveness or shifting global trade patterns. Economists are watching closely. Is this a blip or the start of a new trend? The numbers suggest Germany's days of massive surpluses may be fading. To thrive, the country may need to boost domestic demand and adapt to a more competitive world. The era of easy export wins is over. Germany must evolve. Economists are split. Some see hope, others urge caution. ING's Karsten Brzeski points to strong factory output as a sign of resilience and possible recovery. Commerzbank's Ralph Solveen highlights rising EU exports as a bright spot, but warns of potential dips ahead due to factory holidays. There's optimism that interest rate cuts and government stimulus could help, but falling industrial orders signal trouble. The contradiction, rising production, falling orders, keeps everyone guessing. The consensus recovery is possible, but the path forward is uncertain. Germany's struggles are part of a bigger global slowdown. China, another export giant, saw its own exports stall in August, with shipments to the US down a staggering 33%. Trade tensions and tariffs are reshaping supply chains worldwide, cooling demand everywhere. Germany's export dip mirrors a global trend. Protectionism is rising, and open markets are under threat. When giants like China and the US slow down, the effects ripple across Europe. The world economy is more interconnected and more fragile than ever. For Germany, the lesson is clear. Global cooperation is essential, and going it alone isn't an option. The solutions will require more than just domestic fixes. They'll need international teamwork. What does all this mean for ordinary Germans? For now, daily life remains stable, but workers in export-heavy industries face growing uncertainty. The government must walk a tightrope, defending exports abroad while strengthening the economy at home. Policies to boost consumer spending and invest in infrastructure may become more important. The coming months will be crucial. Will production stay strong, or will the export slump spread? Germany's resilience is being tested, but its history of innovation and adaptation offers hope. The challenge balance global ambition with local strength and turn uncertainty into opportunity.